Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Brent S., Luke A., and Jared W. We have a new guest on the show today, John Lee, Executive Chairman of Silver Elephant Mining, a silver-focused explorer developer with various stage projects in Bolivia, Nevada, United States, Mongolia, and Ontario, Canada. The company is listed on the Toronto Stock Exchange under the symbol ELEF, and also on the US OTC markets under the symbol SILEF. John, thanks for coming on the show.
Great to be on your show, Andrew, for the first time.
Well, John, introduce yourself to the audience. Give us your background and experience in the natural resource sector.
Andrew, my name is John Lee. I'm a chartered financial analyst, the founder and chairman of Silver Elephant Mining. The company is listed on the Toronto Stock Exchange, as well as under the OTCQX in the United States. The company is a mineral exploration company that's primarily focused on silver. It's been around for the last few years. Myself, background, I graduated from Rice University with degrees in economics and engineering. Spent the first 5 years in the Silicon Valley back in the late 90s. And then as a semi-retired person, young age, accidentally got into the mineral exploration and the investment business and took over Silver Elephant as a shell in 2009. And since then, the company has raised about $100 million and then acquired a lot of assets with the current focus in silver.
Your thoughts on the gold and silver markets here, they're a little bit connected. Just maybe speak to the broad market for gold and silver here, and where do you think we're headed over the next, say, 18 months?
Well, Andrew, gold and silver are very much interlinked. They say silver is a poor man's gold for that reason, and both metals being tendered as money since mankind for thousands of years. Andrew, we are entering in absolute unprecedented times. Let me just briefly go over from the technical perspective. Gold took out, first of all, $800 back in the 80s, and in 2009, 10 years ago, 2011, just under 10 years ago, it broke out. It reached a high of $1,800, and it's taken almost 10 years for that critical level or historical level to be overcome, and that took place in June of this year, just a couple of months ago, 3 months ago, and it went to 1850, rested somewhat, and in August. A few weeks ago, it reached out to $2,100 an ounce. So in terms of technical and absolute terms, the gold market, we're witnessing absolute historical trends. And there's good reason for that fundamentally, as we're looking at something even worse than the great financial crisis in 2009, looking at unemployment numbers anywhere from 10 to 30%, depending how you measure, and unprecedented Fed deficit over $3 trillion per year with no end in sight. And the Fed embarking on a unprecedented or unlimited QE infinity quantitative easing, and its balance sheet currently stands at $7 trillion, which is double from it was at $3 trillion just 3 months ago. It's running at the rate of $1 trillion a month, literally. And correspondingly, silver is a bit of a laggard because it has that industrial element to it. However, silver back in 2011, when gold was 1,800, silver was at $50. And silver right now is half of what it was at 27. Therefore, to catch up to gold, even at the current price, you could potentially looking at a doubling of the silver price. And our belief is silver is actually going to outperform gold as it typically does post-financial crisis. And so therefore, in terms of for both metals, there's still a lot upside to come. In terms of gold, it's taken a historical high and it's likely to reach another high in the weeks and months to come. And for silver, it's playing catch up, and there's actually a bit more torque for silver versus gold.
Appreciate your view on that, and there's a lot of issues going around in the world, and a lot of issues with money and how these things are intertwined, and some of the fiscal, call it degradation or irresponsibility by a lot of central governments. You could probably point a finger at the fact that if historic price runs have been anything of an indicator, the price of gold and the price of silver should double their past high. That means, potentially close to 100 silver and gold probably somewhere near the $4,000 an ounce mark. And I think that is actually conservative, probably sometime over the next 3 years. So we'll see how that goes. Maybe it doesn't happen that fast. But look, there hasn't been any rally in silver or gold where the price has taken out its past high and at least doubled. That's an interesting proposition. Well, let's switch over to vanadium for a moment, John. Your company has some vanadium assets. Give us your thoughts on the forward demand for vanadium, and where do you see the vanadium price going, and will it behave like it has the past few decades, or is another trajectory in store?
Andrew, you made the very succinct point about gold and silver. As with all commodities, commodity investment is much about timing. Typically, for metal, you can pick one of the basket, gold and silver, even vanadium. Typically, these metals, given decade, spend 70% of the time going sideways. 1 year, 1.5 year going up, and 1 year, half year going down. And the key here is to want to make sure you enter the market 20% from the bottom and you sell 20% from the top. And I do believe that now is the best time to get in gold and silver, given that gold is taken out of its 1950 historical high. And typically when that happens, out of a very strong technical breakout, is going to advance quite rapidly for big magnitude. And just quickly on gold's target is, if you look at the bottom of the saucer, the trough was 1100. The neck is 1900, and if you just flip the mirror the other way, a conservative target is around 3,000 from today. And the silver at a bottom of a gold to silver ratio of 35, you're looking at potentially $100 silver in the very near term, less than 12 months from now. Regarding vanadium, vanadium is a metal that Silver Elephant picked up 3 years ago while waiting for the gold and silver to make this light of the day. Vanadium is what Robert Freeland, which is a legendary mining billionaire, called a miracle metal for the 21st century, because it's used in modern applications, used in strengthening of the steel, where 0.5% of the vanadium used mixed with steel could double the strength, used in ordinary scrap constructions, and lighten the weight by up to 30%. That's why you find vanadium in modern in airline constructions and in military defense, in missiles, as it lightens the transportation weight. It's also used in batteries, and it's called the redox vanadium batteries. And these are utility scale batteries. They're not as mobile as lithium, but they can store very large quantity of electricity, and the battery itself does not degrade over 20 years, and it has a 100% discharge, unlike lithium. So there has a lot of very, very unique quality for vanadium, and they're using these applications that we see the demand is only going to grow for the years to come. Vanadium is a very volatile metal. When Elephant first got into vanadium was $4 in 2007 a pound, and in 2 years vanadium went to $35 a pound. It's a 10-bagger. And then vanadium since then is sort of fall back to a more reasonable support level at around $10. Our project is economic at $10 vanadium, and that project having vanadium in Nevada is under the final permitting stage with the federal U.S. Bureau and Land Management, going through the EIS process, environmental impact statement.
Certainly, we follow vanadium to some degree here, and there was a pop about 2 years ago, roughly, where we had vanadium prices had jumped up to a point where some of the companies in the United States that also process uranium, namely Energy Fuels, and had started some reprocessing of existing material that they had at their facilities. Of course, the price came back down, and enthusiasm related to vanadium kind of fell out. And I do remember the Prophecy development asset as well back then, and it saw kind of what had happened. Maybe we'll just stay on that for just one moment. Is that vanadium project a parallel focus for the company compared to the silver assets?
Yeah, Andrew, Elephant is the formerly known as Prophecy, and the answer is the Elephant, as his name suggests, as we changed our name in March. And I was just with David Morgan through an interview and a Silver Fest conference. The skeleton is not so much, we're coming out of the closet. Our identity and DNA is silver. The vanadium asset is likely to be spun off sometime in 2021 as that project enters into the project financing stage. to dedicate and minimize that dilution and dedicate the vanadium asset for vanadium investors and vanadium focused audience. The project is going at the very final stage of the EIS process. The EIS is EIS process, for those who are not aware, for U.S. mining investors, is its last stage of the process before construction decision and construction permit could be given, and it's going through the public hearing stage, scoping stage. So majority of the work has been done, plan of operation, baseline studies, and all the mitigation, the proposed mining method, and so all that stuff is being done, and it's going through that public hearing stage. Nevada is one of the is a top 3 mining jurisdiction for mining investment around the world, according to the Fraser Institute. And the plan, just in summary, again, is to spin off the vanadium asset upon it's been granted a permit for mining and construction, and at that time, the project will enter into a project financing stage. The project complements quite well with our silver assets in Bolivia, as one is a bit more challenging jurisdiction in silver and the other one is vanadium. Likely existing Elephant shareholders will be giving a dividend shares from the spinoff company, so act as additional value for the current Elephant shareholders.
Okay, and let's just talk the other assets just briefly. Can you just give us an overview of the silver assets in Bolivia, just a brief overview, and then also the other 2 projects, the one in Ontario and the coal asset in Mongolia?
Our assets in silver, they're situated in Bolivia. It's what we call the 3 O's, the Sunawayo, which we picked up a week ago, and Triunfo, which is we picked up 2 months ago, and our original flagship project, the Pulucayo, which was acquired by the company in 2015. Collectively, they all each have different merit. Sunawayo borders a 350 million ounce deposit called Melcocota, and Melcocota is under application by Elephant with the Bolivian government. So that is potentially one of the largest controlled SEDEX style silver deposit that tend to run very large by a junior like Elephant. So, and Pulucayo has a current 43-1 resource of 60 million ounces. There's going to be a new resource update coming within the next couple of weeks in September, incorporating the recent drill results we have gathered in the last 2 years, as well as just lowering of the resource cutoff with a higher silver price. El Triunfo, of which we just acquired in July, is a bulk tonnage multi-metallic Bolivian deposit, of which it has historical drill hole featuring over 94 meters of 1 gram gold equivalents. It's 0.4 grams of gold, 22 grams of silver, and 1% lead and zinc equivalent. So all 3 together combined, each one of them has the potential to reach well over 100 million ounces in silver resource. And collectively, our target for our expanding silver portfolio is at 300 million ounces in the next 12 months, sometime by the end of 2021, early 2022. It is a very ambitious target, but we felt very confident of executing our business strategy. This year so far, despite the COVID 2020, Andrew, is turning out to be the busiest year for our company. And we will not be surprised to see additional acquisitions to come. Absolutely just out of the park for what we have done so far this year.
Okay, John, and let's talk just briefly capital structure. Can you share with us how many shares are outstanding at the moment? How much cash does the company have on hand? How far will that carry the company? And of course, major shareholders here.
Yeah, so I think, Andrew, all in all, we really minimize any non-silver related activities, and coal and Ontario vanadium project are on the back burner. They're not of critical importance, and they're very minor expenses. Company's current share structure, fully outstanding, is 145 million shares, of which, and then fully diluted is 189 million shares. The company trades at awesome liquidity, 2 million shares a day. We turn over our entire shareholder base in the last 2.5 months. Shareholders including insiders and institutions such as Sprott collectively account for 30% of the share register. We haven't done the financing in 4 months. We have about $2 million in the bank, but continue to these 40 million warrants and options that are coming in on a monthly basis. We'd expect to raise another 2 million from warrant exercise. So therefore, our 2020 remainder 2020 is fully funded.
John, can you just speak to how many shares, on a percentage basis is Sprott in for? And also, John, what's your shareholding in the company?
Well, as I mentioned, 145 million shares outstanding. Sprott came in for just under 9 million shares last year at a price averaging about 30 cents. This public information could be retrieved from our website. and the company is trading right now at 50 cents, so he's doubling his money. He owns 9 million shares. There hasn't been any discussion from him about selling, and he's a longtime shareholder. We also have others alike, such as Maria of Nine Point and other prominent billion-dollar plus fund out of the United States and Australia. They own less than 10%, so they're not disclosable. My family, myself, and my close associates collectively own another 12 million shares approximately. So altogether, close to 30% owned by institutions and insiders.
I appreciate that, John. Now, back in May 2016, approximately, the company did a share consolidation, followed by a split of the shares in mid-2018. Some different changes to the company came about. What was the reasoning for the consolidation and then the split of the shares?
In the 2016 consolidation, it was 100-to-1 consolidation, and we were a little bit ahead of our time. Our share register shrunk from, I recall, around 300 million shares to 3 million shares. It's first of all, it was over 300 million shares, so the stock was trading something around 3 cents to 4 cents. We wanted to consolidate and make it a more appealing trading platform. We were a little bit more ambitious than we thought. The lack of number of shares at 3 million shares created a little bit lack of, it was too many. It was an issue in that there's not a lot of shares being traded because there are not enough shares. And the reason for such an ambitious consolidation was eventually getting onto the U.S. major exchange, which requires a $3 trading minimum. We recognized the mistake, so we did a share split about 2 years later to a 10-to-1 share split to relax our share register to around 50 at the time. And that was the reasoning behind the rationale. I think we're a little bit too aggressive in consolidation, so we had to split to make a bit more number of shares for the companies to be trading at a reasonable liquidity. And our ambitions going forward is again getting on the U.S. stock exchange. So at an opportune time, we might effect a reverse split so that the company trades above $3 to get on the U.S. exchange. And the purpose for that is obviously U.S. is 10 times the Canadian population, and then U.S. is all about all the silver bucks. Majority of them reside in the United States, and the story is already trading a very, very healthy liquidity under the OTC at about 1 million shares a day.
Speaking of that, what is the kind of the thought process on getting, I suspect you're talking about the NYSE Amex exchange. What's the target market cap for the company before you guys attempt to jump onto that exchange? And it makes sense if you have the right size, I believe. And of course, we know that the U.S. market is by far the best and biggest market out there for now anyway. What's your thoughts on how you guys might go about getting on that and when you might do it?
Elephant had already spent majority, most of the heavy lifting is already done to list on NYSE Amex, as you correctly pointed out. And so with listing with Canada and listing in the United States, just to share with the audience, there are really two elements to it. One is to make sure that the company is a eligible reporting issuer, and that is governed by the SEC, or in Canada it would be governed by the Commission. Either BC, Alberta, or Ontario, depending on the resident, your company domicile. So for that, it's already been done. Elephant is a 20F US SEC reporting issuer, and that is actually majority of the heavy lifting, and that just make sure the company is compliant with all the rules and regulations to be a security to be traded on the major exchange in the United States. And the other element is to the admissibility of Elephant by the American Stock Exchange, or it could be NASDAQ, or it could be Stock Exchange Main Board. And each one of those company exchange has their own rules and qualifications. Elephant is eligible today to be listed. The company's market cap, liquidity, and trading history, and the fact that it's already been listed on the Canadian Stock Exchange for a number of years already qualify. So now it's more of a qualitative measure than say as a admissibility measure. Our belief is we will try to start at NYSE Amex before the end of the year. Especially we're in current discussion with a number of strategic shareholders looking to establish additional significant stake in the company. That is really going to put a stamp of approval for our official application with NYSE Amex, whom we're in very close communications with. In terms of the asset of the company, the market capitalization of the company, and the stage and the eligibility of the company, we are already well qualified to list on NYSE Amex, and we're just that little bit cherry on the top in terms of getting a strategic shareholder. And sure about treasury right now, a little bit further from current around 2 million-ish to around 10 to 20. And then that would should suffice getting MX, across that dotted line and getting the company listed. Maybe before the end of the year, depending on how COVID sits about. But I think a reasonable target would be in the first half of 2021.
And John, the company is exploration stage at this point with a little bit of development potentially here. In this stage right now, things can be quite dilutive over the years. And with the market cap around 50 million US, how do you approach the compensation at this point in the company, John, to get obviously to a bigger market cap and potentially operational cash flow?
Well, Andrew, the way we look at it is not so much looking at the market cap of the company on the weekly, monthly, or on a quarterly basis. I mean, Elephant's market cap has ranged from 20 to 100 in the last 3 years, but rather looking at the assets of the company, the value of the value of those assets, and getting the right people to manage these assets. I mean, the worst thing you can have is to have the wrong people manage the assets that we have, which we believe are world class, and then may potentially lose the assets because of the mismanagement, or not getting the right feasibility studies done or drilling the right places. So we try to be very competitive with our line of our staff, according to market prevailing terms. However, I think my overall mandate as the chairman and the director of the board and then the largest shareholder is to make sure that we get the right people to do the right job. So and also given that we have 3 potentially world-class projects in Bolivia and a project in Nevada and other operations in Canada, in Asia, we requires a stretch of our team to really the maximum and complete and total dedication of our management to be focusing on one company and one company only, and that's Silver Elephant. So I think we're very, very competitive in terms of our G&A and our salary structure, given the assets that we are currently managing, and also give credentials and their past operations and their past credits to be managing our company. And not to mention also, just last point, Andrew, the company has raised close to $30 million in the last 3 years because of our activities. We acquired 4 projects in the last 3 years. And this is a very active management. It's really not this typical exploration type of company where the guys go on to golfing or tennising for 8 months at the time, and then when the drill season comes, raise a couple bucks and drill a couple holes. I think our company is far, far away from that. And judging on our current trading liquidity, clearly there's very heavy accumulation taking place. And we'll not be surprised to see multiples of our current market cap in the very near future, especially given the current bull market in silver.
Appreciate that, John. And I think it is a concern for many investors. 2016, the bull market started and it was, of course, stagnant for a couple of years, and then we're off to the races yet again. But before that, from basically 2012 until 2016, it was a pretty harsh bear market. And
horrible.
I think investors, yes, many investors, it's a concern. Waste in management, G&A cost, promotion is a concern when there's a way to do it that meets both shareholder value and also value for the management team as well. And so I think that's important to talk about. Now, let's talk the projects in Bolivia. Now, can you just outline for us and kind of explain a little bit of the position of the Sunawao project in Bolivia, if I pronounce that correctly? Now, I understand that's the most advanced silver project given your guys' application to potentially advance there, which adjacent to it, you have the Malkul deposit. Explain the relationship with the government ministry there as far as your guys' application for a MPC contract or mining production contract. Can you just talk about that and what your guys' goals are with that? Because that appears to be the most substantial asset at the company.
Well, Andrew, it's not so much as the most advanced. The most advanced project would like, well, all 3 projects has limited mining activities. So it would not take a lot to commence a sizable mining construction operation pending sort of company figuring out what the production profile is. However, going into production is not the company's priority. We understand our strength and weakness, Andrew, and our strength is exploration. We are expert exploration geologists in looking for sniffing around, getting incredible, interesting assets, and then de-risk them by exploration, drilling holes, expanding resources, and then eventually figure out a production scenario. So our most advanced project in terms of drill dollars in the ground is actually the Pulucayo project. However, the Sinowayo project and together collectively with the Malcocota project, could turn into a potentially a billion ounce silver resource. And this is not a misprint. Sunawayo is 50 square kilometers in size and 17 kilometer in strike. And that project is a private patented land, just like in the United States. And that's owned by a private individual, of which the company Elephant acquired not even a month ago, a week ago. And the price tag was 6.5 million to be paid over 12 months. So we have the project outright. To the south, immediately to the south, is the Malcocota project. And that is a similar size, around 17 kilometer stretch and another 50 square kilometer. And that project sits right just underneath Sunawayo. And that project is unpatented land and administered by the Bolivian government. And the way you apply for the rights to explore a government unpatented land is through what they call the mining production contract. In the United States and in Canada, you can do this digitally online. When the clock strikes midnight, you can go online, stake your available land, and pay it by credit card, and you're off to the races. In the United States, it's a little bit backward in that you have to literally go to the project, as we did in Nevada, stake the land with a flag or a plate, and then go to the local office. You register. The office usually takes about a week to figure out whether there's other people that are doing the same thing, and then about a month later come back to you to see whether you got the land or not. In Bolivia, it's even a little bit. It takes a little more longer, so they have to check whether your company is in good working, and then you have any prior run-ins or any outstanding dues with the government. Make sure your application is within the specification. The land you have applied is not simultaneously under application with other companies. So that process is undergoing. That process is undergoing for Malcocota. And Malcocota had a historical resource of 350 million ounces of silver, and that was published back in 2011. Therefore, the ounces or resources identification is relatively modern, from 42,000 meters of drilling. And that resource sit literally 200 meters to the south of the boundary. So it literally straddles, and we have every reason to believe that the deposit straddles at the border. And the trend is called the sandstone trend. Extends another 8 kilometers northwest into Sunawayo. We've taken 48 samples along that 8 kilometers, and the results will be out shortly. If these assay results confirm what we believe is the continuation of the Malcocota sandstone trend, we could be potentially looking at a cluster of deposits, of which Malcocota in itself is only 3 kilometer span. We could be looking at a 10 or maybe even 15 kilometers of sandstone bearing minerals that could host a cluster of deposits, and that could stretch over 1 billion ounces in silver resource. It's incredibly exciting. And Andrew, if I could just spend a minute talk about the type of sandstone which really bears a lot of relevance. It is called the SEDEX deposit, which is a sedimentary exohalide deposits, since I'm learning from a geologist. And these are minerals that were born tens of billions of years ago, when there's hydrothermal fluids that exhaled from the bottom of the seabed and spill literally all over the seabed and making a mess. Typically can run from hundreds of kilometers, as witnessed by the Glencore's Mount Isa SEDEX deposit. It's been in production for 100 years, however, still has 500 million tons of resource remaining. There was over 17 deposits, Mount Isa in the region, spanned over 600 kilometers. Another example of SEDEX deposit would be Tecaminco's Red Dot deposit in the United States, in Alaska. It's been in operation since the 70s, over close to 50 years, and it currently is still the largest silver producer in the United States, over 7 million ounces of silver production annually. So it is a very unique type of deposit, easily identifiable, well understood. And the reason we're able to get this project because of lack of foreign investment in Bolivia, because all the other sizable SEDEX deposits are already being claimed by the Rio Tintos, Glencores, and Tecaminco.
Appreciate the overview on that, John. So the goal is to control those two assets there that are adjacent to each other And with that, you guys are starting off with a historical resource of approximately 350 million ounces of silver. So is the goal there to just kind of advance that, de-risk that, and put out some kind of a PEA study on that asset for potential folks who are interested in potentially acquiring that asset?
Yeah, Andrew, you're right. We already have the twin, right? It's either half we're getting. However, I think we both are equally of merit. If you were to go to our website, silveraleph.com, you can clearly see that trend inching, continue towards Sunawayo, just visually from satellite. And we actually think that the mineralization thickens in Sunawayo. And Andrew, the answer to your question is, I don't think it's going to take a PEA for the value of the deposit to be realized because it's such a gigantic in size. Um, and it's 34 kilometers. And when we're looking at the Malkukulta deposit that bears 350 million ounces, Andrew, with my geologist, say, hey, when can we start drilling? And they're telling me, John, that deposit 350 million ounces is only a dot on the map. So you can imagine the amount of work we need to do because it's such underexplored, because it hasn't even got a drill hole on Sunawayo side, and even on the Malkukulta side, only 3 kilometers, which is only 20% of the deposits being drilled. There's a lot of work to be done on sampling. We need to get a structural engineer to go out, even just to walk the deposit, right? It's going to take days and weeks to complete that mission. And there's going to be sampling, IPs, max survey. So all sorts of different things need to take place to really exploit this absolutely incredible world-class size project in detail. And I think the value is going to steadily be realized as we start to get the story out. And just last week alone, we traded 8 million shares. And as we start drilling, Andrew, on a very wide step out drilling, and it's not going to be hard for sophisticated investor, even for novice investor, to put the dots together, right? If you were to drill one hole, you hit, and then another hole a kilometer away, another hole a kilometers away, another hole 5 kilometers away, to stretch that calculation of resources well into the hundreds of millions of tons and potentially into a billion ton range. I don't think it's going to take a 4311 resource or even a PEA for folks to realize the value of this vast deposit at the current $27 silver price, which is a very relevant parameters and the matrix you have to engage. As this type of deposit tend to be a little lower grade and at a very large footprint and requires quite a bit of capex, worthy of a major company to go into. And I think there's going to be a very exciting times to come. And the simple mandate for the company, as we do with all three of our projects in Sunawayo, in Pulucayo, and in Triunfo, is to drill and develop a resource and to demonstrate the company's capability of increasing the silver resources. And then depending on the silver price, depending on the size and extent of each deposit, we can then get the right people either internally or somebody else from a major to help us figure out what is the right production scenario. Open pit, underground, tons per day, production per day, production per year, etc. at the later stage.
When do you guys expect to get an answer back from the Bolivian government on the MPC application?
Mining production application related pertains to the Malkukulta project. We have some good success with the Pulucayo MPC process last year. With it is it's more of an administrative process, and it goes through three major stages. One is the validation for the completeness and correctness of the application, and within that first stage is the technical due diligence, financial due diligence, and legal due diligence. The technical due diligence is about our submission, what we'd like to do with the project, the parameters of the project, the legal due diligence about the legality of the company in Bolivia to apply for the land, and the financial is about our company's in good standing. There's no debt or bankruptcy filings. So fairly basic. Then we go through the negotiating stage with the government, and there is a well-established royalty scheme of which will be applicable for this type of asset early stage without a feasibility study. So it's a royalty negotiating discussion. Usually takes about a month to 3 months, and then followed by the approval of the government. And usually that process takes about 3 months. So we have applied for the MPC in January of 2020. And we're quite optimistic to reaching a positive conclusion in 2021. And two other key elements regarding MPC is that the government is on the first come first serve. So the government is not to entertain or accept other MPC applications before the conclusion, before our MPC reaching a conclusion. And secondly, is if there's any deficiencies or questions or amendment required for our MPC, the elephant has the opportunity to address for every deficiencies and correctness issues on our MPC. So we have gone through this process before, and we feel quite confident. We know what it takes to get to the finishing line, and we're quite optimistic of sometime in 2021 to get the other half of the twin sister under our belt.
Okay, John, and the strategy for Silver Elephant here, what do you think the timeline is to get this, get some of these assets advanced? What do you guys see there as far as your timeline to get that to happen? And then also, you spoke to it earlier, the goal is to prove up these assets for a buyout. What's your time frame? What's your thought on that?
Well, Andrew, first of all, I wouldn't say a buyout. At the right time, we're going to hire the right people to develop these assets. If the capital markets are conducive to that, to minimize our liquidity, as I'm the largest shareholder of the company, dilution matters a lot to me, and management and shareholders absolutely aligned on that regard. Our objective, and in terms of the strategy for those investors who's been around the last bull market started in 2001, we're really taking the playbook from the company called Silver Standards. And that's a company that went from, where we started today, a 70 million market cap, went to $3-4 billion, a 30 bagger, Andrew, despite not having a single mine that's in production. So in less than 5 years, the company went from less than $1 to almost $30, and it's the 30 bagger, and that's a playbook we're taking. We are and the way to achieve expanding resources is twofold. Either you drill the assets or you acquire new assets, and we're doing both, and we've demonstrated ability to do that. We're going to be drilling as soon as we get a bit more understanding on Sunawayo. We like to set a rig there as soon as possible, likely by year end. But however, that project is such a massive size, we want to make sure we identify the right structure. It's such a huge project. We could be setting 5 rigs or 10 rigs drilling at the same time. So that project requires a bit of homework before we really start the program. Pulucayo, we are drilling as we speak. And that project had received 90,000 meters of drilling at 57 million ounces of resource today. Resource update is going to be published, as I mentioned earlier, within the next 30 days. You could look at a substantial increase in resources, calculated at a slightly lower cutoff, and also incorporating the drills that we've done in the last 2 years. And we're going to continue to drill that. Is the 30 square kilometer district. It's the second largest mine, silver mine, based on historical production of 600 million ounces. And when you have a mine of that size as a brownfield exploration, the potential for additional discovery is very, very good. So we're drilling on that deposit. And Ultra Info deposit is a polymetallic gold and silver and lead and zinc deposit. There's a prior 3 drill holes by the previous operator. All 3 hit mineralization of 50 to 100 meters at a 1 gram gold equivalent. And we like to think either these guys are very brainy or the project is no brainer. Probably it's the latter. So we've set 5 drill holes started 2 months ago. We're on to hole number 4. The core looked very good. And if we have good success, then we're going to start another drill campaign. You will not surprised to see Ultra Info develop into a 30 to 50 million tons resource in 2011 at 1 gram gold equivalent. That will be 1.5 million ounces of gold, and that will be another, on a silver equivalent basis, close to 100 million ounces. So all in all, Andrew, our objective in the next 2021, 2022 is to prove up 300 million ounces of silver or silver equivalent. And we think we're well on our way to do that. 100 million ounce from Pulucayo, 100 million ounce from Ultra Info, and up to 350 million ounces on Mokukuta alone, and potentially a mirroring of that, another 350 million ounces from Sunawayo. And so all collectively, I think our 300 million ounces silver is conservative, and we could be potentially looking at 1 billion ounces in first silver resource in the next 2 to 3 years, and which would be absolute envy of any junior today in the market. I mean, 300 million ounces already ambitious, or even potentially completely out of reach for most of the silver juniors. And we were looking at 1 billion ounces of potential going forward as a company. Exciting times.
And John, to talk about the the comparison to, some of the other companies out there that have these single large deposits. I suppose Bear Creek in Peru, I think it's New Pacific in Bolivia there, and then also Discovery Metals, which has been on our show before. These single large silver assets, the valuations. Talk about how Silver Elephant slots in there for those competing with those peer companies, rather than just, being a company that has a bunch of projects spread around that make up a total amount of silver. Obviously, you guys have the potential to do both with maybe one big project. What's your thoughts on valuation and competing with the peers?
Yes, there are really two very interesting points, Andrew, you brought up, and it's always good to be discussing silver with sophisticated hosts. Uh, First of all, I would not necessarily apply a discount to a company just because its resources are diversified amongst different projects. I would, in fact, it could be a positive or a strength. And the way to tell is clearly depending on the merit of the project. If you have a cluster of subpar class assets, obviously collectively whatever made up, right? if it's junk, collective junk is still junk. And if you have, however, on the other side of the coin, if you have collective assets that are all world class and altogether it diversifies your risk, lowers your risk. As mining is a very risky business, and the project, just because it has merit technically, doesn't mean that it can get developed. There's metallurgical risk, and there's also community political risk. So I wouldn't necessarily discount Elephant because the resources comprised of assets, resources from collective set of assets. So that's the first point. We do believe each one of those assets is a terrific asset, because there's no reason for me as a larger shareholder to be spending money acquiring asset and trading our equity for inferior assets from superior ownership. So on the other side, in terms of valuation, silver valuation is fairly easy to assess because there's so few juniors out there. There are probably 30 silver juniors and maybe another 20 to 30 producers altogether, maybe 50 at the best. Around 50 or maybe 70 if you want to include again some of the lesser known and lesser liquid companies. The market is valuing approximately $500 million valuation, $500 million US dollar for approximately 200 million ounces of silver resource companies for mature assets. Again, there's variations depending on the grade and then the potential to explore, discover additional minerals and cut off and whatnot. But that's a general rule of thumb: $500 million for 200 million ounces. And you have the likes of Discovery Metals, and Discovery Metals is around 700 million market cap, and you have New Pacific that's 900, 450 million ounces, and Discoveries is about 400 million ounces, and you have Bear Creek that's about $400 million market cap for about just over 200 million ounces. So it's a roughly guideline with New Pacific trading at a premium and the Bear Creek trading at a discount, and Discovery Metal is sort of in between. We believe that Mt Kota has that potential to reach the size of Discovery Metals and surpass that of Bear Creek Minerals and New Pacific just on the Sunawayo project alone. And then Mt Kota will be doubling up of Sunawayo, and that will be doubled of everybody else. And then you add the Pulicayo and you add the El Triunfo on top of that. And that's why we believe that our current market cap of just under 100 million is very undervalued. And that there's a reason for that, Andrew, too, because our current 57 million ounces, only 57 million ounces is 4311 compliant. So at a 57 million ounce, our market cap is fairly valued. I'm just saying that, Andrew, looking forward, I think we're going to sneak up on the market. As the drills start to turn, as guys start putting the numbers together based on the dimensions of our drill holes and the results of these drill holes that we receive from across all three of our projects, it will not take a lot to figure out that we are embarking on a multi-century silver resource in the range of 300 million ounces, maybe more. And if we're able to achieve that objective, it's not inconceivable that the market assigns us a $500 million market valuation, not unlike our peers, New Pacific in Bolivia, not so far from us, 2.5 hour drive, and they're commanding a $900 million valuation for their silver sands deposit that's around 160 million ounces.
Yeah, certainly an interesting set of circumstances, the various companies we talked about here and where you guys are situated as far as it appears that there's a bit of runway left for you guys to even have half the peer valuation. That's quite a run even from here. Well, John, potential investors who are listening, what would you say to them at this stage and at current price levels?
Well, let's talk specifically on our company because you can hear a lot of silver outlook from other credible, well-known, renowned silver gurus. Uh, I would say we are not only had a bit of runway with your analogy, we're literally not even beginning to taxi. The company is trading extremely heavy volume, and we're not even on the first inning. We're not even, we're just embarking on the runway and not even started. And for those that say, John, it's going to take a long time for you to prove the assets for their value to be recognized by shareholders. I mean, if you take the analogy from New Pacific, I mean, they were at around $1 for 2-3 years, and all of a sudden the market realized the drill holes and the resource, and then it ran up to $5 in less than a year. And the majority of that appreciation is at the drill hole stage, not at the publication of the resource stage. As I said, a sophisticated investor can put the two and two together. And the Lex Discovery Metals is a project that was already been drilled out before, but it took a couple of well-known investors put their stamps of approval on the project, and Discovery Metal went from 50 cents to $2.50 in less than 4 months. And Bear Creek Minerals has been a more well-known story, and so my point here is it's usually the stock can run quite quickly as the company is being recognized by the street. And we had an excellent in terms of street recognition, everybody's still looking at Elephant as synonymous to Pulicayo. But as the drill results of Ultra Info get rolled out, which will be in October, and as we begin to sort of let the story of Sunawaya go out, and as people sort of understood the potential size of this project, there could be very significant appreciation. Andrew, I just want to bring up one last point, take 30 seconds, is people say, well, John, if you don't get Makukota, then all you have is greenfield exploration project without the drill hole and without the resource at Sunawaya. How are you going to value Elephant? Well, my answer to that is, at the current silver price at $25, and at the fact that this is a SEDEX deposit with already close to 400 million ounces, Andrew, the deposit at district is in play by all the major mining companies. And also that Bolivia is looking forward, attracting foreign investment. The previous socialist government already fled. And the country is under a decade of underinvestment and is looking for new investments. So the district is in play because of the size and also because the stage of Bolivia opening for investment. Elephant has the first shot at Malcocota. And even if Elephant doesn't get Malcocota for whatever reason, let's suppose Glencore or Rio Tinto or Tecominco that comes in, all three has SEDEX operating experience. Suppose one of them get that, which obviously is not the best news for Elephants, but still that would put Elephant in play because we share the other half of the basin. So either way, it's good news for Elephant. Another company gets Malcocota or Elephant gets Malcocota. Either way, it's good news for us. The most important is that the district and the story is out on the field in public, and the district is in play. And we definitely do believe that there's going to be a revaluation of the company in a very near future.
Well, John, what about best way for the audience to reach out to you and the company?
Yeah, Andrew, we are quite active on social media. We have a YouTube channel, we have Twitter, LinkedIn, and also our homepage silverelephant.com. It's quite well organized. We'll have a flat tree structure. You can get all the information you want with 1-2 clicks. And just by Googling silverelephant.com, Twitter, YouTube, and LinkedIn, you can get there. We got several hundred YouTube videos and followers, several hundred followers, and it does also YouTube videos, including live shots of our Pulicayo project. And then on Twitter, we got hundreds of followers, and LinkedIn, we got thousands of followers. So they're very active accounts. We highly recommend that you subscribe to receive the latest company news.
Well, John, that's great. Let's leave it there. Really appreciate you coming on to talk about Silver Elephant, and good luck with progress.
Oh, pleasure, Andrew. Great to be on the show.